Keep your eye out on the bottom of the screen. Our ticker team is keeping it alive in terms of the selling that we're seeing in the markets and on individual stocks as well. But our colleague Ritu Singh caught up with Rajkiran Rai, the CMD of Union Bank of India, to talk about the new bad loan circular and their outlook on resolving some of those stressed accounts. Let's hear him out.
I'm not worried actually, because these are the accounts which are already recognized as NPAs long back. Already the provisions are done. So we are fairly clear on all these accounts. So we have 210 days like up to the Q4 of this year, up to January 7th. Before that, either we will come with a very good resolution plan or we will decide to take it to NCLT. I don't think there will be occasion to take additional provision unless it is a conscious call that there is a value in the account, the resolution plan is not able, we are not able to put up before January, and then we will take a call to make extra provisions and wait for some more time.
So given that you're allowed reversal of provisioning under IBC, will that be the most preferred route, you think?
Actually, reversal of provision is a later date. First of all, you make a provision. If you are not following these deadlines, like 180 days, then you make a higher provision. Then moment you take this account to IBC and all that, then there is a reversal. And in the resolution plan also, there are certain provisions kept for reversal. So these are all things as we go forward, we'll see. But then the thrust here is to have a very concrete resolution plan, which is workable, not to come with some ad hoc measures for saving an account. You need to have a concrete plan of resolution.
So one question on the NBFC sector as well, again with the DHFL's default and subsequent repayment, investors have been worried in the market. Do you firstly have any exposure to DHFL, and what are the remedial steps that are being undertaken?
See, I will not be able to talk about the remedial steps as of now, but we do have exposure to this account. We are discussing to find a solution. There are certain things which are in the public domain, like looking for a strategic investor, and those things are being discussed. These are being pursued. So at the right point of time, we make disclosure, because at this point of time, nothing is crystallized.
So would the banks look at buying out any portfolios from DHFL, for instance, to provide immediate liquidity?
Actually, this is a process which is going on. Actually, I think initially, if you see in the earlier period when they had an issue with some short-term liabilities like commercial paper, the banks have gone out and bought their portfolios and provided the liquidity. And this time around, because they had certain sales of their subsidiary companies, some liquidity has come in. With that, they are able to meet certain liabilities as of now. According to our calculation, even July, there is not much stress left. Again, there are August, like in the month of August, there are certain payments which are beyond their cash flows. So naturally, we are working on those. So suppose if we are able to get a strategic investor by then, I think maybe the resolution will be, the plan will be much clearer.
So my last question, what are you expecting from the upcoming union budget?
We are definitely expecting much growth impetus and capitalization of banks to take care of the growth of the country.
Okay. So what is your own requirement in terms of capital from the government?
We are not looking for much support this time. I think most probably we should be able to raise capital by Q3 on our own. But still, support from the government always works as a buffer. In case if we are not able to raise money from the market, then we need to depend on the government. Otherwise, as the things stand, we hope that we should be able to manage our capital requirements.
Okay, growth, growth and growth. That's what India Inc. wants from the budget this time around. But let's see which way it shapes up. For now, the market is very precariously poised at that 11,700 level. Almost 100 points gone on the Nifty. Ashwini Gujral and Prakash Gaba join in. Ashwini, you were telling us, good afternoon by the way, you were telling us earlier in the morning that, this could be a trend day and we could see more downsides. Will it stop at this 11,700 mark, or do you see further downsides through the course of the day? And what should the strategy be now?
Why should it stop? I mean, trend day means closing at the lows of the day. And, there is enough bad news. Just dreaming about growth will not help. So, I think banks are clearly gaining momentum as we go by. And chances are that next couple of hours, even more selling could emerge, because yesterday the kind of range breakdown on Friday we've seen, basically it's all the long positions where the stops have been hit and where more sell-off should be expected. So if you've gone along thinking this will stop, I think you still have about 100 points left. And this is not a mild correction, so that people should keep in mind. Having said that, individual stocks, SBI is a sell with a stop of 345, target of 330. United Spirits is a sell with a stop of 545, target of 520. Hexaware is a buy with a stop of 348, target of 365. One point to note is that today's stocks which are dropping are PVR, Titan, Bajaj Finserv. So even now the best stocks are falling. I mean, Axis Bank is down 2.5%. All PSU banks are down. So in this sort of a scenario, it will be difficult for the market to hold on to most levels.
All right, Ashwini, a couple of questions. If you're going to be shorting the index at these levels, you have the 50 DMA that comes in at around 11,680. So you're counting on that level going out, I would be imagining. And if you're shorting the index, where does your stop loss come in at? And what are the targets you're looking at on the downside?
See, the stop basically 30,650, 700 is a stop. I think 30,200 thereabouts is the target or intermediate target for the bank Nifty. On the Nifty, I think today's high, both on Nifty, bank Nifty, can act as a decent stop. Basically, we are looking for another couple of 100 points on the downside. We have to remember that we fell Friday, we fell Thursday, Wednesday, again today. So, stops or rather support levels are not really holding on. So my sense is that even today, buying may be difficult to come even at lower levels.
Okay.
Okay, well, let's talk about some stocks then. Prakash Gaba is also here with us. Prakash, your view on the index, and are there any fresh shorting opportunities given the way the market is moving, or would you stick to longs?
No, I'll go short certainly.
Okay.
In fact, I feel that the market is falling apart. The pattern that is made on the high, near the highs, is more of a distribution pattern, which basically tells me there's much more downside. Possibly around 11,400, 11,500 is a possibility. So I think it's down. One could short even Nifty now, hold it for a few days, have a stop about today's high, and make money. I have two shorts. Adani Enterprise looks like again a fresh good short here. Possible target on the downside is 137, stop about 154. Even Bharti is looking like a sell. It's got exhausted, looks like it's coming down. Any rallies in Bharti are shorting opportunities. Target 336, stop about 352.
Okay, all right. Do we have Ashwini still with us? I think we do have. Yeah, Ashwini, I wanted to ask you your view actually on Piramal Enterprises. Today this piece of news should be read positively because they're going to be getting some money. But the street has its concerns of its own. For the time being, the stock is on the verge of breaking the 2,000 odd mark. I think the 52-week high was more than 3,000 rupees odd. Would it look like a buying opportunity at some point of time, or do you believe it's likely to drift lower from here?
My sense would be maybe it was holding on for this news, and now that the news is out of the way, news will not help you if the entire market is coming off. I think we should look for 1800, 1850. It's still trading below its 200-day moving average, so I don't think this news will really move the needle on the upside. In fact, it went up earlier and now has been selling off.
Okay, well, yes, definitely some problems with respect to stress on the balance sheet and money that is the need of the hour for some of these larger groups as well. But thanks, gentlemen, for giving us your views on individual stocks and your trading ideas. For now, let's move on. It's a big week for central banks as investors are focused on monetary policy decisions from the US Fed Reserve as well as the Central Bank of England and Japan. CNBC's Martin Soong is here with a quick report on what to expect.
Huge week for central banks. So let's start with the biggest one, the Fed. The escalation of trade tensions has made the global outlook more murky. The markets are now crying out for easier monetary policy. Now, a lot of experts expect the FOMC to, well, comply. Maybe not at this meeting on Wednesday, but definitely later this year. We've got Fed funds futures pricing in about an 88% probability of the Fed pulling the trigger and cutting rates at the end of July. And we're going to be watching this meeting, Jay Powell, to see if he starts sending out the right signals. Across in Europe, keep an eye on the ECB's annual forum over in Sintra in Portugal. Not a policy meeting, remember, but the powwow is still a must-watch because Mario Draghi could broadcast his intention on where rates are headed. There's also a lot of questions about what will happen after Super Mario steps down in October, remember. Over in the UK, meantime, the BOE seen leaving rates unchanged at 0.75% Thursday. Mark Carney had previously stressed that rate hikes are still possible, but not a lot of people believe that, especially with the threat of a no-deal Brexit casting its long shadow. Out here in Asia, meantime, the Bank of Japan, BOJ, expected to stand pat on policy this week. A lot of people believe the Fed's dovishness could force the BOJ to follow suit, putting more pressure on Haruhiko Kuroda to ease.
All right, so if there is no Fed rate cut, or at least an indication of a Fed rate cut on a Thursday, which is when the announcement will be made, Thursday morning for us, then the market may sell off, at least global markets may, because the anticipation is that the Fed will start its rate cutting cycle this time around. But on that note, here's some opinion from experts on the US market and the Fed's rate trajectory and what they're expecting this time.
I don't think the market's ahead of itself in thinking that the Fed has our back. I think the market's ahead of itself in thinking that the Fed needs to have our back. I don't think that there's enough data telling us that they're going to need to prop this up throughout the year. And now I think we've got 3 cuts priced in through the end of the year. The Fed funds futures is almost the market's wish list. The market would love for the Fed to cut rates 3 times and just prop up stock prices, but that's a short-sighted goal.
Appreciate the point about the GDP tracking now 2%, but I think as the Fed, you have to look at the preponderance of evidence and sort of the other indicators, the forward-looking indicators. So if you look at global PMIs, we're just on the cusp of 50. If you look at new orders from those PMI indices, they do not look good. And then you couple that with a payroll story that we got last week. If you look at employment, the cyclical sectors of the economy are basically created no net new jobs for the month of May. Then you couple this with the inflation story. Core PCE inflation for the duration of this business cycle has undershot the 2%. And you know that's what the Fed is currently debating. Then on top of that, you throw in some trade uncertainty, business confidence that is starting to pull back. And I think that's what's ultimately driving the economy.
Okay, all right. Let's see what cues we're getting in from the European markets then. The CAC, DAX and the FTSE should come up for you on the screen. Remember, in Friday's trading session, they ended with some mild red. So you're expecting a bit of a pullback if nothing untoward really came out of the US markets. And those markets, they pull back a tad, but they're up close to around 10 to around 0.2%. So some green on the screen. Our markets, though, we're underperformers if you compare us with what the European markets are doing or what the Asian markets are doing earlier this morning as well. Some of them more or less flattish. Some of them were trading mildly in the green as well. So India is underperforming today. We're down close to around 0.8%. And in fact, if you compare us with what we did in the last week as well, emerging markets like the Shanghai market was up 1.5%. We ended in the red. Brazilian index more or less flattish as well. But I think on that note, let's cut across to our colleague Nisha Podar. She's in conversation with Ravneet Gill, the MD and CEO of Yes Bank. Nisha, over to you.
Thanks for that. I'm joined by Ravneet Gill, the CEO of Yes Bank. Ravneet, so good to have you on CNBC.
Delighted to be here.
Let's take the issue head on, Ravneet. The market, as well as your assessment of the asset quality, seems to have a disconnect at this point. How would you state the 10,000 crore rupees of watch list that you have given and 20,000 crore rupees of sub-investment grade of assets in your total book?
So if you look at the sub-investment grade book that we put out over there, it's a very clinical, objective exercise, Nisha. It's not as if that there is any discussion involved in terms of what we put there, what we don't put there. Anything that trips the rating on that particular portfolio just goes into that. So I don't think that we were selective in terms of putting that book out there.
Right.
Every account that was BB and below in terms of the rating found expression in that list. And I don't think that has fundamentally changed.
Right.
Coming to the watch list of 10,000 crores, I mean, how did we cull that out from the total, sub-investment grade book?
Right.
We saw exposures where there were repayments coming up, where we thought that the cash flows may be insufficient to service those. And we decided to just flag them preemptively. So I think what we did actually was to go out there, be proactive, be very transparent, and put it out there much in advance, rather than wanting to, hold back some disclosures.
Right.
So when you say that there's a disconnect in terms of, the book that we put out there vis-a-vis what the market perception is, it's something that, I find a little difficult to explain.
Right. So there has been a UBS report, and most of the other analysts who have really analyzed your company post your results have all mentioned that there is an uncertainty about the asset risk in the assets that you have in the book. Now, there are several numbers which are much higher than what you have put out. Is there an internal thinking on also taking a much more cautious approach and in the present environment to overhaul your internal systems as well, Ravneet?
So I think a lot of what we disclosed during the Q4 results was a move towards more prudential accounting, a move towards more openness and transparency. And that's the reason why we actually put out a watch list.
Right.
So we've always had a sub-investment grade book out there, but for the first time we put out a watch list. And not only did we put out a watch list, we also went ahead and took some contingency provisions on that.
Right.
So I think what that really shows is a desire on our part, an intent on our part, to be very open in terms of our engagement and be very transparent.
All right. So Ravneet, I have done some bit of research and spoken to many investors and the participants who have been keeping a keen watch on Yes Bank and its asset quality as well. Now, some of the numbers that are doing the rounds are much higher, as I stated, and some of the names which are really creating this perception, as you call it, are ADAG group companies as well as SL, SR, Videocon, Jet Airways. Let's take them one by one.
Yeah.
In your sub-investment grade category of 20,000 crore rupees of loan book, do you have Videocon, and how much of that exposure does bank have to Videocon, as has been perceived by some investors?
So the reason why Videocon is not in that list is because our exposure to Videocon is zero. So if the market believes that we have an exposure to Videocon which has not been disclosed as part of the sub-investment grade book, then I just feel that it is based on misconception.
Right.
I'm confirming to you right now that exposure to Videocon is absolutely zero. Then there were certain other names that you took, which was each one of them actually.
So ADAG has seen a few of the events which have come in which make that asset far riskier from the exposure point of view. So how much would you say your exposure is to the entire Anil Dhirubhai Ambani group, and also are you comfortable on that exposure?
Yeah, so I can't obviously disclose what that exposure is, but what I can tell you, Nisha, is that if I look at the way that exposure is collateralized, if I look at the way management has been, and I talk about the company's management has been very constructively engaged with us in terms of making sure that we come out of those exposures whole. The way they have gone about, in terms of monetization of assets, sale of stakes, etc., I feel very comfortable with that exposure.
Right.
So, it like you rightly said, that it's an exposure that's spread across the group, and it is a relatively large exposure. But there's nothing about that exposure right now which gives me any cause for concern.
What percentage of your 20,000 crore rupees could be on account of ADAG?
It is a significant percentage of that.
And what is your comfort level on the recoveries if some solutions are taken at the group level?
So I personally believe that the assets that the group has, and many of those assets where we have a interest created, the monetization of those assets will make sure that the group actually becomes debt free and be able to service us completely. So the way I look at it is that I feel very comfortable about the the recovery of that entire portfolio, the entire exposure that we have to the group, and I have to say that the group is working overtime to make sure that those actions happen.
All right, so you sounding comfortable, at least you're sounding out a positive note on that. What about your exposure to another group which has been a point of worry, the SL group?
So SL is completely captured in the the sub-investment grade book that we put. I think you also mentioned a couple of other names, I think, which was Jet. Jet, on 50% of the jet exposure, we took a provision in quarter four. And we took it ahead of the market. And for the residual 50%, we will take that provision in the ensuing quarter. So there is nothing that we haven't put out there or not disclosed.
All right. So Jet, you yourself mentioned that, and you are going to provide a little. How big could be the amount as far as provisioning for Jet Airways is concerned? Because that deal is something that I am tracking also very, very closely.
Right.
But there is no headway in that transaction.
Yeah. So like I mentioned to you, that 50% of the jet exposure we provided for in the fourth quarter, and the balance 50% which we need to provide for now is not a very significant number.
And what about your SL Group exposure? Will a large part of that be solved with the deal in Z Entertainment if that were to happen?
That's exactly right. So a large part of our exposure is actually collateralized by by the shares of the operating companies, and we do believe that when the resolution happens at a group level, that will also lead to a substantial resolution of our own exposure.
And what about DHFL? That's also a big point of worry. In fact, Moody's had made comments on the bank based on their on your exposure to DHFL, because DHFL had been downgraded. What is your thought process on that exposure? How risky could that be?
So two aspects to the entire DHFL exposure. First and foremost, their exposure is completely current on our books. So we need to take that into account. Second is, I think on your channel itself, Nisha, a couple of Dhawan was there a few days back, talking about the fact that there is a large transaction that is underway, which should consummate in the next couple of weeks, which I think will also be will unlock the resolution to the challenges that the company is currently facing, and I think should lead to a complete resolution of our exposure as well. So when I look at it in the context of what's happening with respect to the stake sale over there, I feel relatively secure about our exposure.
How much time are you ready to give it? Because Ravneet, I myself spoke to DHFL management. They have pushed the deadline, and that is a point of worry for their own investors. So will you be comfortable if in Q2 there is a resolution, if by the end of Q2, because there can be always a delay, will you be comfortable on that front?
So my exposures are completely current. So there's nothing that gives me fundamental discomfort with respect to that. As far as the resolution is concerned, as you know, it's a large resolution, and it's a transformational resolution, and sometimes these things can take time. There are the legalities around that, and then of course the regulatory approvals, etc. So I won't get too concerned about the timelines getting stretched a little bit, as long as the resolution eventually happens.
Right. So these were the top few names that have been circulated as part of the overall risk that is attached to the bank and its asset quality. Apart from that, a big exposure to the real estate sector. How will you really defend your position on that front?
So first and foremost, at the end of each quarter, we make a clear disclosure in terms of what our overall real estate exposure is. As far as the exposures which we thought were marginal in nature, where we thought that there could be inherent weaknesses, we have over a period of time, including the last quarter, made provisions for those names. As far as the rest of the exposures are concerned, either the large exposures are to the very highly rated real estate names, and then the other ones are relatively small. The point I would make here really is that just to look at it as a real estate exposure in itself is not sufficient. I think what you need to see is that which is the developer to which you have the exposure, which is the project to which you are exposed, and then what is the underlying collateral. Unless you're able to see it through these three lenses, you will never have the picture that actually reflects the risk accurately.
How much of the 20,000 crore rupees, and you said a substantial portion of that subgrade investment portfolio that you have is coming in from ADAG Group? How much of that is also part of real estate?
So there is real estate included in that. In the 20,000 crore book that we put out there as the sub-investment grade also has some real estate exposures. And those really reflected names, as I mentioned to you, where we thought that there could be potential weaknesses going forward, and which we thought we should flag and provision right up front.
So a large part of that is also coming in from real estate, but the figure that is floating around, and I have got, is that probably a huge size of about 25,000 odd crore rupees on account of stressed real estate could be part of your portfolio, and that is really causing a lot of work.
So where I have a disagreement with you is where you say that there's a large stressed portfolio out there. who makes that determination that that portfolio is stressed?
Right.
Every single quarter we do very openly mention what our exposure to the real estate sector is, and you can find it in our results. You can see it on our website.
Right.
But for somebody to make a determination that that large exposure is stressed, to my mind, is unjustified and actually unwarranted.
All right, so NBFC as well as real estate, both interlinked at the present scenario, and we are seeing how things are playing out in these two sectors. On account of that, does that worry you, Ravneet, at this point? And while for the outer public, you have given in public domain a 20,000 crore rupees of portfolio, which could be risky in nature, internally, are you working with a bigger master list, which is on your watch list personally?
No, so first and foremost, again, when we talk about the 20,000 crore and you said that that's the risky book, let's be clear that that is the sub-investment grade book. Now, just because it is sub-investment grade doesn't mean that it has to necessarily slip. So that is number one. Number two, when you say that we are working with a larger master list, it almost tends to suggest that the 20,000 crores that you put out there was in some ways lowballing the actual number. As I said to you, that this is a very objective...
Which market perceives?
Which the market which the market can perceive, but the fact is what needs to be understood is this is rating based.
Okay, all right. Then, well, that's the management of Yes Bank, Mr. Ravneet Gill, reassuring investors that, with regard to the exposure to various stressed accounts as well, the stock saw a bit of an uptick, but it's come off the high point as well. The street wants to know at what point of time and where and at what price can they go ahead and raise money as well. It's already down close to around 20% in the last month or so. Coming back to our own markets though, there's some incremental selling pressure that's come in there. We're at the low point of the day. We're down close to around 110 points as we speak. Only a couple of stocks are doing well. I don't know whether there's some news in terms of tire stocks, but CEAT has moved to the high point of the day. Apollo Tires as well. Suddenly we're seeing a big spike up on those stocks. Otherwise, the screen is just red all over. Mid cap, small cap, the Nifty Bank, all of them struggling in today's trading session. Anuj joins us as well in the studio for a quick chat. Anuj, it's not looking too good at all. You shorted at any point of the day, you would make money. And this after the 90-point downtick that we saw on Friday itself.
Yes, and Nigel, the one reason that I repeated the points I made on Friday morning as well this morning was that the way advanced decline was shaping out throughout this month, this was a matter of when and not if. The market would have corrected at the large cap index level as well. And once the range break was clear, somehow the Nifty's lower end was being defended, 11,850. Once that was broken, the market would have tested the 50-day moving average, and in fact now we are very close. In just 2 days from being defending 20-day moving average, we are now moving towards 50-day moving average. 11,680 is what we have. Now the issue here is that is this going to be just one of those routine correction which stops at 20 or 50 day, or is it one of those corrections which completes the normal bull market correction and goes to the 200-day moving average of around 11,100. I think that is something which is the more pertinent question now, and you can get away with 40-50 points here or there, that's okay. Also, what is important and what's clearly visible right now is that the market is looking at even good news to sell into. For example, a Piramal, the way in the morning, the stock rally and then got sold into, Yes Bank, that initial uptake while the CEO was talking has been used to sell, and how. And the other problem for the market is that now even the stronger stocks have started to decline. I think it started with Axis Bank, and now you can see ICICI Bank as well. Having said all of that, I think the bigger problem still remains in the broader market, and that's where I think the way stocks are falling in the F&O market, 20-30%, today's case in point being PC Jeweler and Jet Airways. I think the fact that a lot of stocks are getting out of F&O, the fact that a lot of stocks are going to see increase in lot size is creating a bit of a havoc right now in the broader market from arbitrage desks, from many desks, and that's why you're seeing this kind of selling pressure on the mid cap side as well.
Oh, absolutely. And this point you were making about the stronger stock selling off, you spoke about the banks. Look at Titan. It has been the biggest gainer this year. It's down 2% today. Look at Bajaj Finance, down about 1.5%. Bajaj Finserv, Axis Bank, TCS. All of these stocks have started to correct. So clearly now it's just, basket selling that you're seeing across the board and not just the beleaguered names. But Anuj, thanks a lot for that. Looks like it's going to be a tough afternoon, at least for the bulls. But we will keep tracking the market for you minute by minute. So do stay tuned in. Let's take a short break on that note. On the other side, more market and stock specific action.